Welcome everybody to ACG2001, Financial Accounting 1, Chapter 8 Practice Worksheet. My name is Professor Neil Chinese, and I'll be walking through the instructional video on how to go ahead and complete this bank reconciliation. Now, before we get started with the actual completion of the worksheet, I'd like to go over some rule of thumbs when preparing a bank reconciliation. So before we actually go ahead and assess all the components of what's happening within this problem, we have to understand how to treat certain events that happen as to why we have to go ahead and prepare this bank rec. So for instance, deposits in transit, how are they treated? They will always be treated as an addition to the bank side. Outstanding checks, how will they be treated? They will always be deductions to the bank side of the bank rec. Some of the other events that could take place are if the bank goes ahead and they collect a note on the behalf of the company, plus interest that is collected on the note. That will always be treated as an addition to the book side of the bank rec, the company's side. Any sort of charges that the bank imposes on the company, whether it be for monthly bank service charge or a fee for purchasing checks or a fee for having an NSF situation, a non-sufficient funds, that would be treated as a deduction to the book side. In addition to the service charge being a deduction to the book side, we could also have an NSF situation, a non-sufficient funds, where we go ahead and we deposit a check written to us, the company, to the bank, but there's not enough funds in our customer's account to transfer into our bank account. So the check essentially bounces back to us. That would have to be a deduction to the book side. And lastly, the one sort of instance that could go either way would be an error. And how we go ahead and assess which side of the bank rec the error gets adjusted to is, first we have to identify who made the error. And whoever made the error, that's which side of the bank rec it'll go on. If the bank made the error, it's going to be an adjustment to the bank side. If the bookkeeping made an error, we would go ahead and make an adjustment to the book side. From there, we have to go ahead and then assess whether it's an addition or a deduction to the cash balance, all right? So everything outside of an error will stay consistent with how we treat it in relation to this bank rec. And ultimately, before we get started, the whole point and premise of this bank rec is to reconcile the cash balance between our bank account and the book records. So let's go ahead and get started in actually preparing this bank reconciliation. It says here, at the end of the month, Hard Medical Consulting's cash ledger indicates a $32,625 and its bank statement shows $28,900 on deposit at the close of business on June 30th. We have to go ahead and we need to prepare the bank reconciliation using the following set of information. So before we get started with A through E, what information do we have? We have the cash ledger balance of $32,625. So that's going to be our beginning book balance that we list here. Additionally, we have what's showing in our bank statement of $28,900. That's going to be included in our top right box, $28,900. Now again, the point of this bank reconciliation is to get these two balances to reconcile and equal due to various changes between exchanging the book's information and the bank's information. So let's read part A. The June 30th bank statement lists $25 in bank service charges, which have not yet been recorded by the company. So like we discussed briefly in our rule of thumbs, service charges would be deductions to the book side. So we'll scroll down to the book section of the bank rec and we'll go ahead and we'll say service charges for $25. So part A, check. Next, it says outstanding checks as of June 30th total $3,250. Like we mentioned previously, outstanding checks will always be deductions to the bank side. So we'll go ahead and we'll write outstanding checks. And it was in the total amount of $3,250. Part B, check. June 30th, cash receipts of $6,400 were placed in the bank's night depository after banking hours and were not recorded on the June 30th bank statement. So this one, we have to dive a little bit deeper because it's not explicitly stating one of those terms that we spoke about earlier. Not every single time it'll be explicitly stating, hey, deposit in transits are X, or outstanding checks is X. Sometimes we have to interpret what's being said to us, okay? So again, June 30th, cash receipts of $6,400 were placed in the bank's night depository after banking hours and were not recorded on June 30th bank statement. So what happened here? We as the company dropped off those checks from customers to deposit them into our bank account. We recorded that on our books, so that information is reflected in our bookkeeping system. It's not reflected, however, on the bank statement because those checks did not clear that period of time. Therefore, these are considered deposits in transit. How do we treat deposits in transit? They will always be additions to the bank side of the bank rec. So we'll go ahead and go to the addition side of our bank rec and we will write deposits in transit. Let's clean that up a little bit. In the amount of $6,400. C is complete. Moving on to D. In reviewing the bank statement, a $300 check written by Jackie Company was mistakenly drawn against Hard Medical Consulting account, our banking account for our business. So, what is taking place here? If it's not a deposit in transit, outstanding check, a note being collected, an SF or bank service charge, the odds are that we're dealing with an error here, okay? And remember, listening back to what was said previously in the beginning of the video, errors are that one sort of instance that could go either way as far as how it impacts the bank rec. It could be on the bank side or the book side, addition or deduction on either side. So let's dive in deeper. In reviewing the bank statement, a $300 check written by Jackie Company was mistakenly drawn against Hard Medical Consulting. Who made the error? What side did it occur on? Well, it occurred on the bank side because the bank took money out of our account because of a check written by Jackie Company. The bank actually took it out of our account rather than in another account that Jackie Company had intended it to come from, okay? Jackie Company is just an outside entity that isn't really related to anything we're doing here, but it is part of the error situation. So we've identified the error has occurred on the bank side. The bank made the error, so we have to do an adjustment to the bank side. Now, is it an addition or is it a deduction? So, being that money was accidentally and mistakenly taken out of our account, when money should actually be included in our bank statement balance, we have to add that money back in because it was again mistakenly deducted and wrongfully deducted from our bank balance. So it will be an addition, and we'll go ahead and we'll write error under the addition section. And we will add $300 to the bank side of the bank rec. Like stated previously, errors are going to be your trickiest instances to go ahead and categorize on the bank rec. So pay particular attention to any time an error occurs. Next, we have E. It says, the bank statement shows a 250 NSF check from a customer. The company has not yet recorded this NSF check. So what has happened? We go ahead and we deposit a check to the bank from a customer. When we deposit that check, and when we receive that check more specifically, we've recorded it and logged it down as an increase to cash on our books. Problem is, that check basically bounced because the customer who wrote us the check didn't have enough funds in their account to transfer into our account for the amount listed on the check. Therefore, did we actually receive that money? We did not. So it is going to be a deduction on the book side as it relates to the cash balance. NSF check, deduction, in the amount of $250. So now that we've completed and categorized A through E and we have our beginning balances, we can now start calculating and doing math to come up with our bank rec to see if we've completed everything. So we'll go ahead and we'll add up our additions. We'll take our deposit in transit plus the error, 6,400 plus 300, we get $6,700 in total additions that we will add to the bank statement initial balance. Additionally, we only had one deduction for the bank side of the bank rec in the amount of $3,250. And I typically like to go ahead and put this into brackets, signifying that it is a deduction to the total balance. Now, if we do our math, we take 28,900 plus the total additions of 6,700 minus the deduction of 3,250, we get $32,350. That is our adjusted balance per the bank side of the bank rec. Now time to switch gears and do the same sort of calculation for the book portion of the bank rec. We started with a book balance of $32,625 that we have to reconcile. We have no additions, so this will be just blank. We have multiple deductions, so let's go ahead and add up our deductions. We had $25 in service charges, and then an NSF check that was sent back in the amount of $250. We add that together, and we get a total of 275 total deductions. We take our initial book balance that we must reconcile. We add in the additions, which was just 0, and then we minus our 275 total deductions to give us a grand total of $32,350. Now that our bank reconciliation equals between our bank and our book, we have successfully reconciled this bank rec. Good luck moving forward, everybody.